Hello everyone, welcome to That ESG Show. Today we have a very special guest with us, Mr. T.P. Ostwal, somebody who has a very extensive experience in advising national and multinational clients in direct tax, personal tax, transfer pricing, business acquisitions, mergers, joint ventures, etc., in addition to the traditional areas of audit and assurance and company law. Over the last 30 years, he has advised a host of corporate houses engaged in diverse range of businesses on cross-border transactions. Mr. Oswal, you're a complete tax guru. Thank you so much for joining us today. Let me start by talking to you about the pandemic. The IMF Global Financial Stability Report of April 2020 said that disasters as a result of climate change are projected to be more frequent and more severe, which could threaten financial stability. Further, the pandemic has highlighted to all of us that business sectors are deeply interconnected across borders and that societies of all types and wealth levels are vulnerable and that the environment is under increasing strain. So, have you observed a shift in investment practices or decisions of corporates in the past 2-3 years in the ESG space?
I don't think it has had any impact as far as India is concerned. ESG is still not mandatory. ESG is voluntary. So far, SEBI has mandated that first 1,000 listed companies should create, first of all, atmosphere of compliance of ESG from the current year, 22. And 23, they are making it mandatory for all the companies. So therefore, still people are grappling with to understand what is ESG stands for. Environment, social and responsibilities that needs to be understood by them. Of course, some companies have adopted these standards quite in advance. For example, let me tell you, Tata Steel, they started it long before. Then you have Reliance Industries also did it. We are the auditors of that company, and so we know about it. And I am on the board of a company, Polycab India Limited. They also released their report yesterday in AGM, and they are also complying with the ESG standard. So therefore, it is the companies are coming out with that. What will happen possibly because of this change in the shift? What you have said is very true that global environment requires to be protected, and therefore every company will have to take the steps which really save the impact on the ESG on the environment. So therefore, they will have to take all those steps. Now, if they do not take the steps, who are the people who are going to be? First of all, the major problem will arise is the lenders, the banks and institutions and the investors who are investing into companies, shares of this type of companies. They will start objecting to that. They will make it company to be compliant with ESG. And if you are not compliant with ESG, possibly their investors will shift their investment decision to other companies. It is very essential. And if the investors start shifting their investment priorities to the other companies, automatically the pressure will mount on the companies to comply with the ESG. In a particular sector, suppose there are 3 companies or 4 companies. One is compliant with ESG, and the returns are little lower than even the best of the company, little lower. The investor will prefer that company because over a long period, they will benefit out of that. And they are protecting environment, which is their social responsibility and legal responsibility. Under the provisions of Companies Act under Section 166, this is the responsibility cast on the directors of the company that environment must be protected. If this is a legal requirement, this is voluntarily being made compulsory. Otherwise, also, in my opinion, legally it is compulsory. Why it should be made voluntary? SEBI said, anyway, we are giving you a first option because today there are no measures available how much compliance you are doing and how much you are not complying. If that is not known, the directors write in the report, oh, we are ESG compliant, we have done this step, that step. That's not good enough. Somebody should audit it, somebody should monitor it. So therefore, it is essential. And therefore, in my opinion, the stakeholders, which will include the shareholders, the investors, employees, government, and the banks, everybody will be concerned. They will look at this company with a priority, with a good eyes, if you are the ESG compliant. And that's why you look at the best of the reports which have come from the companies, they give a lot of importance to ESG compliances, and they devote a lot of space in their director's report how they are complying with the environment. And there are companies and companies which have created committees, the committees of the independent directors, to ensure that the company complies with the ESG requirement.
So, sir, you spoke about ESG becoming mandatory. So, is that the reason businesses and new startups should start thinking about ESG very seriously? Or are there other reasons that they should be thinking about it?
In my opinion, if it is a new business, it is must. The government should not give license unless they ensure the government that we will be ESG compliant. Start the discipline from beginning. Why should you wait till the company spoils the environment and then say that now be compliant with the environment? So all the new enterprises, new businesses, ESG compliance should be must. Anyway, environment ministry's approvals are being taken by the all manufacturing companies. License takes long time, 6 to 8 months. And therefore, I am quite confident the government must be ensuring that you are a ESG compliant company. But they should be told that you should disclose to the world that you are ESG compliant. Therefore, all the stakeholders believe what you are saying.
Increasingly, ESG risks are being incorporated into management and all decision making. Do you think that ESG factors could be a systematic source of outperformance?
If the investors have to see that investments are coming up in a particular business, the investor has to ensure that you are an ESG compliant company. And if you are an ESG compliant company, then the loans which are given by the investors to your company will have a priority lending rates, lower rate of interest, and therefore you benefit out of that. If the investors give you some concession in the basic rate of return based on basic interest rate, automatically you will therefore be feeling comfortable in complying with the ESG. So therefore, concessional rate of interest, and internationally it is going on very seriously. If you are not complying with the ESG, then what are the steps you have taken to comply with the ESG? For example, in certain industry, it is not possible to comply ESG. You cannot do anything. Carbon is created. The carbon dioxide is created by you. But then you can buy carbon credit. So you are buying carbon credit from the industry, other industries. It means you are incurring additional cost, and that additional cost will make you responsible citizen of the country. And therefore, when you buy carbon credits, eventually the industry as a whole is benefited. Somebody else is protecting the environment.
A growing number of investors are increasingly demanding ESG data from companies that is consistent, comparable, and reliable. With the BRSR being applicable to the 1,000 listed entities, how do you think the companies are going to shift their reporting strategy?
Now, the reporting strategy it is as such is mandatory under the board of directors report and the annual general meeting. In annual report, which they circulate to the shareholders, and this annual report goes in the hands of the investors, also goes to the bankers, also goes to all stakeholders, employees, and that is reviewed by all stakeholders very carefully, and they ensure that the companies are complying with the ESG requirement. And if they make a wrong statement, of course, they are answerable. Nobody will make a wrong statement, because ultimately this is approved by the independent directors also in the board of directors meeting. What interest independent directors have got to certify and got to approve something which is not correct. And therefore the awareness is really going up. Polycab went public only 2 years before. And in the 2 years time, they have immediately come out with this year. It has been made mandatory from the current year, but they have complied last year's report as an ESG compliant report. And therefore, why they have done it? When this was going on, the market realized the impact, and the value of the share went up from 700 rupees to 2000 rupees. So therefore, you can imagine how much appreciation investors have given for such company which is ESG compliant. So therefore, my suggestion is everybody should come out with very categorically in favor of ESG and beat the drum saying that we are ESG compliant company, so that everybody give you proper marks and consider it to be investors friendly company and stakeholders friendly company.
But now let's talk about the other side of things. A criticism of ESG investment is that it favors tax avoiding tech companies and that there is an almost perfect inverse relation between companies' ESG ratings and their effective tax rate. What are your views on this?
Say the tax avoidance is going to be the thing of the past. Wait for 2 years, the tax avoidance will be disappearing in the world. The OECD G20 came out with some framework. USA was not agreeing to that framework and the common pillar, the common tax, etc. But with the change in the environment, change in the ministry in the USA, with Trump going away and Biden came in, he adopted new standards and he accepted OECD recommendation, but with some improvement. What he said, don't make everybody, all the companies in the world compulsorily to adopt these standards. Only first top 100 companies, which are mostly 99% mostly will be in USA. They should be compelled to comply because they have deep pockets and they can comply with this global standard. That pillar 1 and pillar 2 concept OECD worked out. And they made some changes, modifications into those rules. Then the Biden proposed 15% should be common minimum standard rate world over. So if you are a country with a tax haven like Dubai, they will also have to introduce 15% tax. And the countries which have got lower than 15% tax, they will have to upgrade to 15%. And the countries like India, where the rate of tax is 30-40%, they will have to bring down to 15%. And therefore, once the uniformity in the rate of tax happens world over, there is no need for them, there is no possibility of tax avoidance. Avoidance will disappear. This is what people have been propagating, and which to a great extent I agree with this is going to happen. And if that is going to happen, why should we talk about the tax avoidance and the tax incentives? And the incentives will disappear. The incentives will be possibly given by the government, like production linked incentive schemes government of India has worked out. They will give you incentive, but if there is a surplus left in the hands of the company, that surplus will be taxed at the rate of 15%. So therefore, new regime is happening and there will be no concessional rate of tax, and that will possibly change the world's order. And therefore, in such situation, ESG will become important. So ESG, when you incur the expenditure on ESG, it will be recognized, it will be by the regulatory framework, it will become mandatory. Disclosures also will become mandatory. Your profit will go down because of the expenditure, and therefore you will be paying lower tax because your profits are lower, and not because you have planned your profits accordingly. So therefore, there will be more and more incentive. If today the people are not bothered about the tax, they are bothered about the market capitalization of their company. If the market capitalization of the company is excellent, they say whatever is the tax payable, we will pay. So how do you increase market capitalization? By increasing share price of your company. How do you increase the share price of your company? By complying with the ESG standards. And if you comply with the ESG standards, investors will prefer your company rather than preferring the other company, which is showing a higher profit but not complying with the ESG. That will eventually, in the long run, will suffer.
Right, and so like you said, that the change of pace is becoming more and more rapid. So, in today's world, in this scenario, what would your advice be to both legacy businesses and new startups on how they can lay the foundation of becoming ESG ready and become future proof?
If your business model of the company which creates environmental distortion, you know as a promoter that this is creating, this is emitting more carbon in the air than what is required. All emission standards are known to you, and if this is known to you, it is your duty to take all precautions and steps which are required to be taken with a view to protect this. And if you cannot, still you cannot do that, then you have to buy carbon credits. You have to buy from market. It means somebody else is doing on your behalf. So neutralization takes place. For example, I'll tell you, when Dhirubhai Ambani wanted to set up the Jamnagar plant in Gujarat for petrochemical refinery, world's largest petrochemical refinery, the government wanted them to take steps for protecting environment. So they said you do deforestation or forestation near your plant. Take 100-acre land. They said we can't do anything in 100-acre land. Please give us 1,000-acre land. We will do it. And the government ultimately gave them 625-acre land, which is adjoining to their plant. And you will be surprised to know, it will be a pleasure to know that 1,85,000 mango trees are planted and all mangoes are exported from that place. Huge best Kesar quality mangoes of Jamnagar, very well known in the world. And there are other trees also they have. And there are other birds and etc. which also they have brought in and put it in that farm, big farm. And 625-acre land plantation. You can't walk. You have to move around in the car only, or the battery driven car. It's fantastic. And therefore this is the step required. So if Dhirubhai Ambani could think about 30 years before, why can't others think about this in the present scenario?
Sir, to conclude, we are my take, so we would like to get your take on ESG in India.
In my opinion, ESG is here to stay. It is not that you have an option. Right now, 1 year is an option. So you can choose to see who are doing what and then what steps you are required to take. If it is not possible, you'll have to get out of the industry. You automatically you'll have to get out. Today investment community is aware that this process has already begun, and if the process has begun, they are now telling management that take the steps. If they don't take the steps, they will dispose of the assets, dispose of shares. And if the shares of your company, which is very fancily quoted at a very high price, are there are no takers, but there are only sellers, what will happen? Market capitalization of the company will go down, and therefore you will take the steps to comply with the ESG. And if you do not take the steps, you will go away. So therefore, what is required is the board of directors of the company will have to set up a separate committee which is complying with the ESG, and that committee will have specialized people. They will have to engage number of people who will look into the ESG compliance of the company, and this will be a quarterly review. And at the end of the year, a detailed report will be submitted, and therefore the members concerned of this committee will have some skill. Automatically that skill will create this awareness, and therefore people and the corporates will become ESG compliant companies.
Thank you, Mr. Ostwal, for such an interesting conversation. With this, we've come to the end of this episode. For more such content, please subscribe to our YouTube channel, which is My Take with a double Y, and follow us on our social media handles. See you around.